Let's take a look at the state of the housing market. Lennar is a mover today, down almost 4%, saying this morning that it sees a 9% decrease in average sales price of home deliveries. This has a new report from Redfin showing home purchases fell through at the highest rate in nearly a year. What's that all telling us about the state of the housing market? Joining us now is Zelman Associates Executive Vice President Ivy Zelman. She was just ranked one of Barron's most influential women in U.S. finance. Nice distinction. Ivy, welcome back. Good to see you.
Thank you so much, Sarah, for having me. I appreciate it.
What's the takeaway from Lennar? Because for a while with these stocks, it was just all about the low supply that was keeping things strong.
Well, actually, it's really more the strong demand that's keeping things going. And the builders are offering incentives, mortgage rate buy downs, and certainly arguably a net price decrease and a better value than existing. But with respect to Lennar today, all the stocks are selling off. You know, Sarah, I've been doing this for 30 years, and to see the stocks actually go up when the 10 years backed up as much as it has been somewhat shocking. But, you know, in all fairness, with the economy as strong as it is and wage growth great, and we see household formations, we still see strong demand despite rates rising. Their decline in home price was really due to their focus going down in price point. I think their fundamental quarter was very strong.
So you think it's worries about margins on prices?
I think it's just overall worries about the backup in rates and the impact that it has on affordability. You know, the market's starting to appreciate that affordability is under pressure from, I mean, think about everything going on in the home insurance industry. There's, you know, higher costs left and right for the consumer. So inflation is hurting the wallet. I think that the market's waking up to that.
So are these stocks, would you say, hard to touch in an environment like this where mortgage rates have just gone up so high?
You know, I think you really have to be a stock picker in this market. And I think that you have to recognize there are builders that are gaining share and are executing and generate strong returns that have balance sheets that are rock solid. So, you know, if you want to be a contrarian and go against the backup in rates and assume there's no soft landing, it's really a bet on the economy. So everyone has a different view on that. You know, understanding the direction of the economy is not my job. But if you are more, I guess, bullish that we can have a soft landing or Powell orchestrate what he's intending to do without breaking the economy, then you do want to buy home building stocks, the best ones in the space.
Ivy, I wonder how you're thinking about geographic dispersion right now. I keep reading about the risk of oversupply in multifamily in the Southeast, where things have obviously been on fire. And then you got people like Mark Benioff trying to boost at least the reputation and image of cities like San Francisco. What do you think is not well understood right now?
Well, I think the Sun Belt generally has been where everyone's gone, whether they're single family or multifamily. And we do have a tremendous amount of supply with respect to multifamily and backlog, and completions or backlog is at the highest level it's been since the 70s. So I think what you're seeing is that multifamily is seeing pressure on occupancy. Rent growth has decelerated, although still positive. Blended rent growth, that is. We actually had one of the public REITs say that their new move-in rent growth this past quarter was actually down 1.4%. So we're seeing slowing, and I think the Sun Belt markets are seeing more competitive pressure because of all the lease-ups and all that supply that bet that the Southeast would continue the strength that we're now seeing might be an oversupply situation for the near term.
I was talking to Diana Olick, and we're wondering what about the investor market right now in housing, Ivy. What you think institutional investors are doing? Are they looking to offload and take profits?
I think the institutional investors have basically pulled back and thinking about the frenzy, and it was the, you know, sexiest girl in town for a while, and everybody had to be in build for rent and multifamily, and all the capital was chasing that, especially within the Sun Belts. You just can't pencil a return now. I mean, think about the cost of capital, Sarah, and how much the overall returns are going to be pressured, even as you're starting to see the fundamentals are not going to see a reacceleration in rent growth. Rent growth during the pandemic, when it surged, you know, historically, you know, operators would do flips if they can get 2 to 4% rent growth. And we saw rent growth in the high single digits and even the low double digits. So the numbers just don't pencil. I don't see them offloading. I think there's really a buyer strike, as there's really not a transaction market. I think that everyone is sort of waiting. And at this point, it's difficult to really understand how much values have declined in multifamily. I mean, experts are saying that down on average 15, 20%. But what's the true market without really sellers willing to capitulate at today's values? I think there could be further downside. It's a tough market.